The markets are all over the place. One minute they're happy, one minute they're worried. I know inflation underpins everything. Are the markets too optimistic about what we'll live through in the next 6 to 8 months?
Well, it's a very interesting question. You know, in a way, the world is splitting into two. And that means that we probably will see lower growth, and there is a risk that we will see higher inflation. And so the market is very resilient, given that backdrop, I think.
So, which means that you're expecting maybe a correction? And are there parts of the markets that seem too sanguine at the moment?
Well, we've been saying for quite some time that we think it will be more difficult to make money going forward. And so I suspect with all the uncertainty that we are seeing just now, that we could continue to see, tough times. So
what's it like being in the markets? Do you worry? Is this an opportunity? What does it mean for how you position your portfolio for a long-term investment?
Well, I think the way to behave in the market now is just to be broadly diversified and very, very long-term. You really need to put your long-term hat on. And I think to do, tactical reallocations and movements is very, very difficult because they move so fast. You know, when we last met in Davos, it looked like the US was going to be fantastic from a stock market point of view, and Europe, all the leaders we met from Europe were really, really depressed. Well, you fast forward a couple of months, and the whole thing is just turned upside down. So it's very, very difficult to get these turns right.
But, and Nicolai, what does it mean longer term? Because actually it's unclear where the trade barriers exist, whether market pressure will make the Trump administration do a U-turn. So even 3-4 years, visibility is extremely difficult.
Yeah, no, absolutely. We really don't know how this is going to pan out. I think what is certain is that the long-term trend of globalization, growth, these kind of things, that will look very, very different going forward. So the easy money is not there anymore.
You have over, I think, 50% allocation into U.S. assets. Does that change?
No, we are very happy with our U.S. allocation. We have, big holdings in Treasury, and we have, big holdings in the large companies in America. They are great companies, and we love owning them.
But, I mean, okay, Treasuries, are they a safe haven? What are they? Because
yes, we think
quite differently.
We think it's the safest place you can be.
Still now, despite the market move and some of the uncertainty?
Yeah.
That means dollar stays a reserve currency?
Well, so there are other people who are better when it comes to currencies than me. We, for instance, did a podcast with Ken Rogoff last week, so tune into that one and find out.
I love that I'm speaking to podcaster to podcaster, but Nicolai, overall, so 15%, for example, Europe. Yeah. Are you allocating more to Europe, as opposed to other emerging markets?
No. So what we have a very clear mandate from the Ministry of Finance, which in broad terms tell us where we should be invested. And what we do is we are very, very long term. We stick to the mandate and make just small allocation relative to that. And I actually think to have a long-term plan and a long-term mandate in these turbulent times is a very, very good idea.
But it's hard. I mean, when you look at, for example, the Magnificent Seven, some of the tech stocks, I mean, you were slammed because of the market volatility in those. Yep. So staying in takes quite a lot of courage.
Yeah, I mean, on the one hand, on the other hand, we are, after having been down, the market is now pretty much back to where it was when you look at the global index. And, the fund is pretty much where we were at the beginning of the year. So you just have to sit through some of this volatility. I think it's interesting, when you look at our first quarter results, we were down some $40 billion. Now, that's giving back only 10% of the combined gains of the 2 prior years. And, markets don't go up in a straight line. You have to assume some volatility here.
They also don't go down in a straight line.
That's also correct.
Where do they go down first? Is there any indicator that you see for a bigger market correction?
Well, I think it's all depending on what's going on with the trade tariffs and whether you manage to solve the kind of the relationship between the superpowers, right? We are seeing impact now in terms of incoming container traffic into the US and so on. So starts to have some real economic effects.
Nicolai, when you say, I mean, we started the conversation by saying actually there's a split, right? There's a fragmentation around the world. What does that mean for tech stocks? Why are you so still invested in them? Do you think they're immune to it?
Well, so I think if you have this fragmentation, it will have more negative implications for markets. We publish our stress tests every year, and we put them on our website so that people know what we think in the various types of outcome scenarios. We think if you have a proper fragmentation of the world, could be like 35-40% downside in markets.
Did you actually, change your portfolio to maybe add some stocks or certain positions when there was a market rout.
So we have a very delegated mandates within the fund. So some people would have done that, and some people wouldn't. It depends. It's a very high level of accountability in this fund.
Out of the Magnificent Seven, is there one that you think will come up better than others?
It's difficult to say, but it is what is clear is that AI has really real implications for efficiency. So last year we think we increased efficiency and productivity in the fund by 15% by using the new tools. I think this year will be even higher. And so we are working really hard with it and applying it to the whole tech stack that we have, and it's has got huge results.
What's Tesla? So is it a Trump play? Is it a renewables play? Is it what do you do with the stock?
Well, I don't have a firm or specific view on that one particular company. So I think you can perceive that in many different ways. What it is actually.
So when you look at China, how does China play into all of this? I mean, the biggest fight on earth is probably between the U.S. and China.
Yeah.
How does that change again your position on where you make money and how?
Yeah. So again, we look at China as a collection of companies. We think they have some great companies, and we are invested in those companies. We don't really do allocation just based on geography. When you look at the U.S. tech stocks, they would have exposures around the world, and just because they are listed in America doesn't mean they are U.S.-only stocks, right? Same in Europe. You look at the big European companies; they are global companies, global leaders. In, the Swedish companies are global industrial leaders. In Denmark, you have pharma companies. In France, you have luxury goods companies. These are global leaders, incredible companies.
But because of the tariffs, are you expecting the tariffs to come back down? Again, you don't know whether a tariff is put in place now.
I don't know. I think there is one guy who knows, and it's not me.
So you just stay firm. Nicolai, talk to me about renewables.
Yeah.
I mean, it's clear that it's not part of the Trump administration focus right now.
Yeah.
What does that mean for how expensive they'll be and actually transition?
Yeah, we got it into our mandate some 3-4 years ago that we could actually start to invest in renewable infrastructure. And at that stage, these stocks were investments were just very expensive, low yield, a lot of competition to get in because everybody was trying to make their portfolio a bit greener. So we did very little. Now it's very different, right? They are not particularly in favor. The potential returns are coming up. There is less competition, and so we can make real investments here at good returns, and that's what we're doing.
Where? Europe?
In Europe and also potentially in the US.
US, so it hasn't. Do you think it's slowed down actually the adoption of renewables in the US?
Well, I mean, it depends whether you are talking about wind or solar. We think they are potentially attractive investments.
What about the less liquid real estate? I know you're tipping your toe into this to because of mandates.
Yeah, well, we're tipping our toe. It's a pretty big toe because we have close to 1,000 properties. We own 25% of Regent Street in London. We own big holdings in Manhattan and so on. I think relative to the stock market, these things start to be pretty attractive. You had kind of a perfect storm with everything from COVID, working from home, regional bank uncertainty and so on in the US. Now, just relative to other alternative investments, I think some of them are pretty attractive.
So less liquid, but actually more attractive in terms of returns. Will you be buying more?
If we find the right ones, yes.
So right ones is what prime real estate in big capitals.
Yeah, prime has generally done better than less good real estate.
Nicolai, I can't tell whether you're bullish or not on the U.S. because you say invested in the U.S. you have 50%. But do you think some of this is an opportunity for Europe to either attract talent, attract companies, and attract capital? Well,
in the long term, U.S. has got a terrific, spirit, innovation, ability, great companies, great management, business models, and so on. What we're seeing now, we are seeing that Europe potentially is getting its act together, taking away some bureaucracy, starting to try to cooperate, merge businesses to make kind of stronger champions. And I think we're seeing the start of that, and I think there is a sense of urgency kind of creeping in there. So it will be really, really interesting to follow. Now, I think you can look at this world in many different ways. You can put on your, you can be worried or depressed and so on, or you can put on your student hat, which is what I'm doing. Your student hat, because we are at a time where things are changing so fast, at the same time as technology development is incredibly fast. And so just to live, at these times and see what's going on here is just so fascinating.
I love your podcast, and you have someone from Formula One. Did you learn anything about leadership, or what's the best piece of advice you've gotten for leaders?
So the Formula One episode is out in a few weeks, and I think what is really fun there is to talk about speed. Of course, they really live in the fast lane. But that's not only about the race, but it's also how they think about speed in the organization, speed in decision making, all these kind of things. Just really, really fascinating. And he's a very, very charming and professional CEO.